What is going on, everybody? One of our subscribers actually had a comment in one of our previous videos, so we're going to make this video for that. And that is, how can we use TradeUI's option flow filtering system to identify swing trade setups for option contracts between 45 to 60 days till expiration? So sit back, take some notes, and let's get into it. First, we need to identify what a swing trade is. A swing trade is when you take a position and you expect to hold that position anywhere from a few days to a few weeks. In this case, our target range is 45 to 60 days. So to do that, we're going to filter down option flow to see if there's any swing trade potential out there. First, we're going to cut out all the day trading and all the leap trading. Leap trading is people who are investing long-term in options, buying something that's going to take a year or more to actually come through. Day trading is going to be one of those that's anywhere from a couple of minutes to maybe 1 or 2 days. So to filter that out, we're going to actually manipulate our days till expiration. So let's go ahead and say 14 days is the minimum contract, and our maximum contract length will be 90 days. So that gives us a good window to really utilize that 45 to 60 day window to where we cut out a lot of the unnecessarily fluff down here. And I'm looking for ask contracts, and lastly, I'm going to look for what we call out the money contracts. That means that they're buying these contracts way out the money, so there's really strong room to the upside or really strong room to the downside. So now when we actually break down through here, we want to look at the quick little top flow list we have here. And we want to look for only contracts going in one direction or the other. In this case, NVIDIA has a lot of puts. We have 0 calls, 5 puts. And then we have other companies like Coin has 5 calls, 0 puts. CCL has 3 calls, 0 puts. So we want to look for positions like that. So let's look at XOP for 6 calls and 0 puts. All right. So XOP right here, this one looks good. The days till expiration is 19 days to 47 days. We have a large premium contract for $148,000 here. The upside is only 1.75%, so it's really not a big move, but in the hindsight of things, it's a big move for the certain amount of time here. So if you sold puts on this, it gives you a lot of opportunity to collect a lot of theta and potentially get a 50%, even up towards the 80-100% return if the trade works out like that. So let's look at the chart to actually see what's going on here. So when I go to XOP, all right, so XOP actually looks pretty good on the technical side. So for a swing trade, remember the first thing we want to do is draw out our support and resistance lines. So right off the bat, we actually have our coming up to an actual former support line, which is a new resistance line. However, if we look right here, it looks like we found a new support zone down here. So for that means that this line right here is our new target. And if you look where we're at here, we actually have a little bit more room left. Now this is only a little short pop. However, we got to understand the long-term play for swing trading directions. When they buy these $130 strike calls, these $131 strike calls, they're not betting that's going to that strike. Sometimes they're thinking that that's the baseline and it can continue up even higher. So what it's showing here is this zone is now a new conservative target. So if you were to sell a put contract at $120, you have a good potential to collect nice theta all the way up because it looks like it's going to 130 before it goes anywhere else. It could break right through here and go to the next zone, which is 140. The reason we know that, the option flow contract is showing us hints that that is an opportunity here. They entered these positions roughly around $127 to $128 a share. So we'll go down to our shorter term chart. They actually got in towards the end of the day when it was actually trading up in this area. This is when they decided to get in and implement it. So they're jumping in after the stock already moved. Those are only, remember, 19 to 47 days. So a little bit over a month to happen for some of these. But this is a very conservative play here, especially if you sold the 120 put. Give yourself some in the money opportunity. Give yourself a high statistical advantage. And really collect that theta to the upside because the chart's looking great. The option flow looks even better. Now it's just time to put it all together. But guys, we found one quick little trade just by filtering down all the option noise that came in that day by using TradeUI's option flow tool system to give yourself a trading edge. If you want to check out TradeUI for yourself, go ahead and click that link in the description below. That'll take you right to TradeUI's site. Go ahead and try out the trial, see if the site's made for you. If it is, great. We would love to have you and love to keep you. If it's not, we understand. If you know somebody who would benefit from this site, go ahead and send them our way so we can help them grow as a better trader. Guys, I hope you enjoyed the video. Go ahead and give it a like and go ahead and subscribe if you haven't because we have more good content coming out in the future. Thank you.